All right, let's get started. Sweet. Okay, so thanks all for coming. Daylight savings puts me back in Eastern time zone. I'm typically an hour ahead, but where I live, we don't do daylight savings. So all the futures clinics up until now have been 8 p.m. my time, 7 p.m. Eastern. So typically I was doing futures clinic at 7 p.m. because that's 8 p.m. my time. But now that I'm back in line with Eastern time zone, it's going to be 8 o'clock moving forward. We have this session, another session, and then one more after that, and that pretty much concludes Futures Clinic. Pretty much concludes all the curriculum. I'm planning like a little bit of a surprise week 8, which I'll get into more details about that later. But the goal from there on is to kind of turn Sunday nights into almost like a prep work, like a prepare for the week once we finish Futures Clinic, because then we can all sit. Maybe we could all do like a Discord stage where we can all sit down and chart what we see on the indices, what we think is going to happen for the week, um, levels to watch for, key levels that we can bounce off of later in the week. We can set alerts there. That's kind of the goal, is to kind of equip you guys with how I trade so that way we can all collaborate in the future and do a weekly prep. So that way we know where those massive reversals and those massive liquidity cuts can happen. So that way we can all work together to snipe lows and highs of days throughout the week. So that's going to be the eventual goal. But obviously, I need to cover my strategy. Holy, we are ripping now. Yeah, that's crazy. Um, and yeah, there was a really, really great example just now of the kind of trade that I would take. Uh, Obviously, like based off of previous sessions, I've basically taught in a sequential manner. For those who watched week one, it was basically an introduction to prop firms in general, right? Basically, what is a prop firm? How do we trade it? NQES, why are they important? Who can I recommend NQ and ES for, like prop firms in general? All that kind of jazz, right? Pros and cons of trading prop firms versus not. And then week two, I got into a little bit of the charting aspect of TA Masterclass, which I talked about how to chart levels on NQ and ES, the importance of double bottoms, the importance of double tops, the importance of integrating the VIX into that. In the third week, we talked about context, right? We talked about when to take a trade, when not to take a trade, and just to kind of avoid getting caught on the wrong side, like for example, not buying puts when we're sitting on an hourly double bottom. It doesn't make sense, right? It makes more sense to buy calls near a double bottom if Heatseeker shows confluence, or if it doesn't show confluence yet, look for some sort of potential confluence to form throughout the day for longs, because obviously we don't want to chase puts on a gap down, just like we just in general don't want to buy puts on higher time frame support, right? So Friday was a great example of that, right? We were sitting on a pivot level on QQQ. I think it was 601. We had a massive pivot flip level that we never really got above, but it also didn't make sense to try buying longs into that resistance because we never broke above and held, right? We just kept rejecting, 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 which was 67.72, 67.75 zone on SPX, right? So because of that, I wouldn't really be thinking to try to buy calls because we were just sitting in the zone between key support and key resistance. So until either one of those breaks, it doesn't really make sense to take a trade, right? Which is why a lot of people got um, struggled, right, that day because there was really no sense of direction, right? It was literally just chopping the entire day. I believe we gapped down and we just chopped, right? So context is important. Context, 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 right? I went over a little bit of heat seeker confluence, right? Because that heat seeker element is what we're using, right? So context in that aspect is important. We have the importance of aligning TA with heat seeker confluence, right? Then we just have to do proper execution, which is exactly where we're going to end up today. Execution in the term of entries, planning the trade, entries, execution, exit, and review. Basically, we're going to cover the life cycle of the trade, right? From start to finish. What do we do? What are we looking at? Fantastic. You learn how to chart. You learn the importance of context. You learn the importance of heat seeker confluence. And that leads us to today's session, which is now what, right? We have all this information. What do we do with it? And Today's session is going to be talking about um, how I leverage futures and the fact that um, there's a certain way that I trade futures that allows me to be able to catch momentum shifts quickly, right? Because obviously, when we trade options, we can size for zero. We can commit to the trade, right? But if we're trading NQ, which moves $20, you make $20 for every dollar that it moves, but you also lose $20 for every dollar that it moves, right? So we're trading at 1 to 20 leverage, and you can't really size for zero, right? You can't just buy longs and just hold it, you know, to zero, right? Because the either if you hold it to zero, you're losing the account, right? But on the upside, no theta, right? So I'm going to talk to you guys about how we can use futures and how I use it to get much better zero drawdown trades, right? But before we get into how I do that, we need to talk about just the life cycle of the trade in general. So with that in mind, I do have a little bit of a like a little talking point here. Yeah, so regarding the specific way that I trade for zero drawdown, I really want to give a lot of credit to my mentor. I have two, Glitch himself, but also AAM Dylan, who is now known as CMKDylan in Asgard. One of the oracles. He is the one that's partnering with Glitch to launch CMK Capital. He is the C in CMK. Um, he was the one who gave me permission to cover this topic of how to get zero drawdown trades using futures. This is something that is covered in his own bootcamp, which he does have his own bootcamp, options and futures. So I'm not gatekeeping that information, right? Because he gave me the permission to do so. But also to that avail, he is going to be running another bootcamp in the future. If you're interested, reach out to him or reach out to me. I'm happy to help you guys with any more information. And to that avail, uh, let's get started. So with that in mind, when we're just considering the idea of what we're looking for when we're looking for a trade is obviously we need to know what an A plus setup is, which is an hourly double bottom. I'll show you guys for an example. Do we have this example here? So I'm just going to clear this out for a second. It's a little bit less clean on NQ. I think it was cleaner on QQQ actually. Where we had number one, an hourly double bottom. Here, liquidity hunt, right? So all right, NQ is approaching an area where we could double bottom liquidity hunt, right? Oh, I'm sorry. I'm not sharing my screen yet. Thank you. Thanks, Mike. Thanks, Protons. Okay. So yes, here we are. We have an example of a double bottom. We have QQQ on the hourly time frame. NQ it's not as clean because the double bottom was happening in regular trading hours, but we do kind of have a little bit of a pivot here, right? Where we had a major reaction off of. And remember, Futures Clinic week 2, when we talk about measured moves, you can argue this is a major level here. You can argue there's a major level here. You can argue there's a major level here. So we have a region where we could get major reversals off of. And in this case, this ended up being confluence with QQQ for a double bottom on the hourly time frame here, right? So step one, hourly double bottom. Check. Confluence step two, 3 minute or 5 minute double bottom, right? You can argue to take the first bottom, right, which is in line with the direct deflection. Let's go back there real quick. And that's totally valid. That is completely and totally valid. However, if you wanted to play the deflection on futures, it's a bit challenging because we don't necessarily, or we can't necessarily size for zero, right? So how do you know that we're going to exactly deflect here. Is it going to be here? Is it going to be off this inverse correct setup? Is it going to be off of 675 directly? Is it going to be off of 674? Is it going to be off of 6770? Or is it going to be off of 594 or 593? We don't necessarily know, right? But on options, we can size for zero and commit to the trade because we know the reversal is imminent. We just don't know how to reduce drawdown on futures because if you have a 20-point stop loss or a 30-point stop loss, they can very easily wick you out and then reverse, especially in this elevated volatility that we're having, right? So I like to play the 3-minute or 5-minute double bottom, which we have here, right? I like to have some sort of structure to base my entry off of, right? So I don't really play the first bottom, I play the second. Even if it means I missed the trade, I at least have comfort knowing that I have some sort of structure to base my entry off of. So that's step two, right? So from the start of our analysis on this trade, we have an hourly double bottom here and here. Step one, check. Step two was a 3-minute double bottom, which we already saw. We had one. I think it was like February 17th. It's probably like the cleanest day that we've had. I was looking for it too. Step two, lower time frame double bottom, whether that's a 5-minute or a 3-minute or relatively any time frame you want to use. I use the 3-minute. So 3-minute double bottom. Step two, check. The third part in our A plus setup is Heatseeker confluence. This is just to confirm, just to make sure. Yeah, February 17th, 10:33. We had this little region of exhaustion from bears. We had a certain buy the dip zone. We saw floors on SPX. We saw inverse rug setups on SPY. We saw a gatekeeper node on 594 preventing downside. And we had a king node to the upside, right? So Heatseeker confluence. Step three, Heatseeker confluence. Check. So we have an A plus setup. We already said we have key support. We have a potential, let's say we're up here, right? And you begin to see price pulling back. You have a potential for a double bottom. We can start planning out the trade, right? That you can say if price comes into this area, we can begin thinking about buying the dip. And we can consider buying the dip if Heatseeker supports that, which is step three. We begin planning, right? As we begin reversing, as we begin um, pulling back, after we get a little bit of a bounce, we can start looking for the double bottom, looking for that region where we could reverse, right? So when Heatseeker confirms it, when you have that double bottom, we begin to start asking ourselves, where are we going to reverse? On NQ, you can't size for zero, right? We don't know exactly where we're going to reverse off of. We don't know that we're going to bounce off of 24,449 to the cent, right? But we can know where the liquidity sweep is confirmed. And the liquidity sweep is confirmed if we reclaim 24,462, which is where the double bottom would hold here. So what does this mean? When I'm looking to plan the trade, I'm going to enter if NQ reclaims the double bottom level here. And you can do this a few different ways. You can do stop buys. Stop buys. What is a stop buy? And how does that differ from a limit order? A stop buy, there was actually a question here. Does it get nerve-wracking when the second double bottom is four candles, aka closer to 12 minutes rather than 3 minutes, or is it purely based off the idea that price is holding above 24,450? The idea is when price breaks below this level, and I'm about to get into that. This is a perfect segue, FSC trades. Perfect, perfect segue. That when we get the sweep, when we get the hunt, when we get this candle here, when we get the sweep of the low, I'm placing my buy orders above where price currently is. I'm placing my buy order here, placing my buy order here when price is here. Why do I do this? I get filled on the way back up. I do it this way because if we hit level and we continue dumping hard, I don't get filled on this buy order, right? Because my buy order is above where price is. I don't get filled. If we just break and we just boom, go lower, the sweep was never confirmed, so I'm not in the trade. Whereas if I had a limit order here and we try to buy the dip here, but we knife through it and we go lower, you're instantly stopped out in seconds. That's why I place buy orders where I know this sweep will happen here. There's a couple limitations with this. Yes, it's a cool concept. There's a couple limitations with this though. We are in a very elevated high volatility regime, meaning we are getting massive, massive price swings. You can get filled and wicked out based off of arbitrage, based off of the spread being so wide, especially if you're playing overnight. So we need to be cautious doing this, and we need to save this specific method for when conditions are a little bit more favorable, which in high vol regimes, I would recommend in this case to size down and widen your stops. Typically, when I take buy stops like this, I'm placing buy orders here and putting stops below low of day because I'm banking on this being the liquidity hunt that I know market makers are going to want to defend, and they're not going to let their positions go red. Otherwise, they dump it harder. I'm banking on the fact that I'm entering with them and they're defending their position, getting the sweep. But if you don't want to do buy stops, you can wait for price to break back above level, enter on a specific pullback, which we didn't get it here, but you can certainly enter with a little bit more confidence if like here maybe, or maybe like even like here. I If you want to be careful, you can do it that way, but I do it here. And tonight was a great example. I actually did that today. Wanted to share this with you guys. For an example from today, here we had the double bottom, right? We broke above. I'm sorry, we broke below. Notice how my order is here, and we never I did not have a limit order here because if I had a limit order here, as price was breaking below, I would have been knifed and stopped out instantly because of volatility, right? I didn't do that. I waited for price to come back and confirm the hunt before entry. Just switch over here real quick. And here is what happened next. My buy stop got filled. What was it here? No, this is my stop loss. I kept it really, really quick in and out because I was preparing to come into futures clinic. But I wanted to take this trade as an example of like in the moment trade that I would actually take. I did this with the micro, right? I didn't do this with the mini. I did this with the micro. But I took about a good like 14, 15-ish points got out basically here and called it a day, right? But the idea is we catch the sweep, we catch the reversal, we catch the momentum back to the upside, you trim into strength. Zero drawdown trade. Instead of getting knifed and seeing drawdown, this was this instant momentum shift, got in and out for, yeah, like 15 points. I just took one micro just to kind of do the example live for you guys tonight. Um, yeah. So this specific type of trading happens all the time. Now, the reason I didn't try for more tonight is because we definitely did have a ton of volatility and I didn't want to stay around for it. Plus, I was getting ready to get on live with you guys and I didn't want to like be like off focus taking a trade while I was preparing to talk to you guys tonight. But yeah, as you can see, that didn't really work out like amazingly. It was basically just this. Bears are in full control tonight. I entered here, right? Just caught a quick pump up and exited. So this is a great example of why context matters, right? We had a massive gap down. We opened below support. Bears are in full control. Pops were getting sold. Um, Pops got sold back down. Pops got sold back down. Um, this pop even got sold back down too. So with that in mind, we need to be careful taking longs, right? Because I think, where was that support level? It's here. Since we're below support, we need to be careful taking longs because we can get caught on the wrong side of momentum, right? But I did the example just for you guys. You can also argue, you can also see how these little mini setups work out often, right? Stop buys, stops below, I'm sorry, buy orders here as we wick back above. You can catch an instant little momentum shift back to the upside, very little drawdown. Same concept. But the idea is we want that A plus setup checklist. We want to see double bottom being held, a 3 minute double bottom. We want to see Heatseeker confluence. If you want to throw in the VIX 2, also important too. VIX hitting double top, Timmy hunting the highs. Obviously, context is bullish for the market if VIX is showing weakness. Pair that with Heatseeker, pair that with double bottoms on the charts, you can catch a very nice reversal, which I believe it was, no, it wasn't really super clean. Did have support here though. So catch the dip here. VIX hit double top, 9:30 a.m. dip on Friday, caught the bounce back to the upside. Heat maps weren't really clean in that aspect, so it wasn't really an A plus setup. But I believe like first thing in the morning Friday. That's right. Maps was still a little shifty at open then. I think it was the open shift off of 601 QQQ that we basically tried to hold it. But nevertheless, it wasn't a super clean setup first thing in the morning, but VIX did hit key resistance. So nevertheless, it was a decent dip buy just based off of the charts, based off of technicals, right? So with that in mind, from the get-go, we have our plan, right? We know what an A plus setup is. We know what to look for to enter on the sweep of the high or the sweep of the low in a bullish scenario, sweep of the high in a bearish scenario, right? Plan the trade, right? See the trade through, enter, see the trade through, exit. Now we're going to get into the review. Now, before I get into the review, exits should be based a mixture off of technicals so much as the heat maps themselves. If we were considering the February 17th uh, double bottom, which was like roughly like 1040, I believe it was. Yeah, I think it was. Yeah, it was this dip by here. Yeah. We can see that we have the Timmy Hunt of the lows. We put our stop buys. We enter the trade and we get the reversal. Great. We're in the trade, right? We snipe the bottom. We got a nice little bottom tick, right? Maybe you saw a couple points of drawdown if you entered here a little bit, but if you put your stops below low of day, you were never stopped out, right? Your targets can be a mixture of TA and Heatseeker, right? So you could say something like target the double top, potential double top here. You could exit here into strength, right? But we also see QQQ and SPY are pointing up at 680 and 600, right? So you can also say maybe trim half of your position where the double top could be and ride the other half to those upside nodes, which QQQ. These nodes. Yeah, here's the exact same kind of pattern. Say we enter, so there's the low. We enter here, stops below low of day, right? Target the double top, which is roughly 598, but we also target 600, which hit here, right? This would be your trade for a roughly 9-to-1 risk to reward on futures. You could typically kind of stay in this trade too, right? Because there's no theta decay. So you can set trailing stops. You could do so however you like. Set trailing stops and let it ride pretty much, or just put your stops at break even and you pretty much caught massive, massive win. If you have your own personal funding account, you could basically hold this multiple days. But if your prop firms, you can't hold overnight, they auto close you out. But it was a nice dip buy, right? There's take profit one, take profit two. You could even call it the double top, the bigger double top. Call it like here, roughly around 600 QQQ. So that leads me to an important part, right? This is a fairly simple concept. This is a fairly simple type of strategy, right? It can be a bit nerve-wracking because, I mean, even just placing limit orders here before price taps it can be nerve-wracking because you can get stop hunted. Like, I know people probably got stop hunted here. People probably tried buying the dip today here, put their limit orders here, stop loss maybe like 50 points below, and probably got stopped out, right? So it can be nerve-wracking taking limit orders because we don't know exactly what we're going to reverse. But I had to stop by. Never got filled, never stopped out, right? Once everyone was stopped out and then they reversed it, I caught the trade, right? But that leads me to an important point as to seeing the trade through, which is also going to be an important segue next week, which is going to be talking about psychology, risk management, right? But nevertheless, there's an important point that I wanted to make here regarding um, seeing the trade through, trusting the maps, trusting the trade, trusting the thesis, right? I always am going to recommend review, journaling your trades, right? The amazing part is that prop firms typically have journaling software directly integrated and connected to your funded account, right? You can see your average winner, you can see your average loser, you can see average hold time for winners, you can see your average hold time for losers. You can see all of these statistics directly in your prop firm, right? But there's another important aspect regarding asking yourself what went well during this trade. An important concept that isn't really talked about enough is how did you feel during the trade? Because it can be nerve-wracking. What could you have done better? Did you feel FOMO? Did you feel FUD, aka fear, uncertainty, doubt, right? The whole idea behind that is to do whatever you can to turn those feelings into statistics. The whole reason behind quote unquote turning your feelings into a statistic is to kind of discover patterns in yourself that play themselves out on a repeated basis. That's to say, if you have 3 winning days and you take a losing day, what typically happens the day after a losing day? Do you tend to have another red day after you've already had one? Then you can ask yourself, is there a higher statistical probability that I have a red day directly after already having a red day? Or asking yourself, after taking a break-even trade, do I have a string of red trades after that, right? The idea is to turn those statistics into a pattern, right? One of the most challenging aspects of trading is self-awareness of what's going on within you during the trade itself. And for those who have done one-on-ones with me, I say it all the time. The entry is an art, but exit is warfare. Those who have done one-on-ones with me know I say that all the time. Entry is an art, but exit is warfare. It's uncomfortable holding in profit, especially when you don't want it to get wiped. But just as drawdown is unrealized, so is profit. The ultimate peace is going to come from having pride in knowing that you stuck to your plan whether you won or lost. Not every single losing trade is a bad trade taken, but also not every winning trade is a good trade taken too. If you have a winning trade but you chased an entry, that's bad practice, right? Or if you shorted on support but you made money, that's bad practice. It's not always going to be a good trade taken, right? But if you have a solid strategy and system, right? Even though maybe you take a bad trade, if you understand yourself and you understand your triggers, you can rest assured that if you're doing the same thing over and over again, that's to say, maybe doing stop buys when liquidity sweep is confirmed into Heatseeker confluence with clear upside targets on hourly double bottoms, like my system, even if this trade were to not have won, if you journal your trades, if you turn your feelings into statistics, if you understand the patterns and you understand probabilities, and you have a system and a statistical edge in your trading because you've journaled enough, it doesn't matter if you lose this trade because you're seeing 10 trades ahead that maybe you win 8 out of 10. And maybe this is number 2 out of 10 where you lose this trade because then what you have is statistical edge, right? That as long as you follow your plan, as long as you understand and review your trades and journal your entry and journal your trades and understand how you feel in the moment and maybe journal alongside the candles, which I used to do with Dylan, you can gain an understanding of self-awareness that will prevent you from deviating from your plan. The goal behind journaling is exactly that, is ensuring you are not letting emotions get in the way of letting your plan see through, right? Don't allow your emotions to let you deviate from your plan. And the whole point of writing down how you feel is to discover the triggers that cause you to deviate from your original thesis, right? So starting from just from the beginning, right? The life cycle of the trade. We plan the trade, right? We know what the checklist is, right? We want to see double bottoms or double tops on on NQ or ES. We want to see um, double tops or double bottoms on a 3 minute time frame or 5 minute time frame, whatever you choose to use. All of that is okay, right? There's not really any set time frame whether you want to use or not. Me classically, for those who want to know how I trade, I just use a 3 minute time frame, right? So higher time frame double bottom, lower time frame double bottom, heat seeker confluence, bonus points if the VIX is showing key support or resistance. Yes, Mike. Once it broke under, then I set the buy, right? Because then I get filled on the way back up. Whereas you get filled and we don't know if we're going to start going back up yet, right? So plan the trade. We know the A plus setup. We enter on the stop buy. Um, we have our price targets clearly defined, right? Support or resistance. mixed with Heatseeker, support and resistance. You see the trade through, exit based off of what you see on the charts, based off what you see in the Heatseeker, and review. Journal what went well, what went wrong, what can I do better, um, and then you have a recipe for success. And that was pretty much it. That's pretty much all I got. It's a pretty easy and straightforward um, method of entering, right? I, especially on futures, need to be very cautious on entry because futures can't size for zero, right? We have to be very mindful, especially with the spread, especially with especially NQ itself is way more volatile than ES. ES tends to be more mild, NQ tends to Timmy hunt more, which is why I trade NQ. But also, knowing that, I want to take advantage of the fact that I don't want to be part of the Timmy hunt. I want to enter once I know the Timmy hunt's occurred, where it's confirmed, right? So that is pretty much it. I did it in about 40, 35, 38 minutes. So I guess I'll just open the floor for questions if anyone has any. And thanks, Nika, for answering some of those. So if anyone has any questions, I am open. But other than that, if there's no other questions, then that's pretty much it. It's kind of a shorter session today. Is this the same setup playing out right now on NQ besides having Heatseeker's confluence? Let's see. I haven't looked at NQ. Let's see what's going on here. This is an interesting spot. Yeah. I think we're below. Did we finally break November lows? For those wondering who may not be aware, we have basically been range bound on NQ between November's highs and lows. So this is November lows. Oh, oh damn, I didn't even realize we swept November highs. Or did we? No, we haven't. We've basically been range bound in this area here. We never broke the high, we never broke the low, right? So the idea is when consolidation breaks in either direction, either we break this low here or we break this high here, and we hold below, let's say we do this, we're going to get a massive move down. So this is literally the last line in the sand for bulls. We need to reclaim 24,162. Otherwise, we are going to have a very, very bad time for 401ks. ES, I believe, has already broken. Yes, I prefer NQ because of the volatility and Timmy hunts. ES has not broken November lows. But we did Timmy hunt the highs, which we did here, which is kind of a bullish signal for the market. I remember this day. Glitch and I were talking about the fact that ES Timmy hunted the highs, and go figure, this is a higher time frame weekly Timmy hunt that is now playing out here. So I am think that we're in for a bad time, especially if ES breaks and holds below. My thing is all eyes are on ES hitting 658450 and holding. We hold level, we can be in for a bounce back up. Otherwise, yeah, things will get ugly. We have a long way down. Next immediate support is 6405. The bad news is we have that massive node on yeah, 6620. Oof. Where is that on here? Yeah, that's a big yikes. 6620 is a long way down. I don't know if it'll hit, obviously, because that is a very, very big move. That's what, like 120 points from spot price. I don't know if this is gonna hit. How much did ES cap down? So from the close of the day, no, let's go to actually let's go to close of the day. So okay, so we close at 6741. We gap down to 6685. So that's roughly 40. Someone do math. 42 brings us down to 6700. What, like 60 point dump? Oh wow. US 500 6615. Damn. Yeah, I was gonna say. Go figure. Target hit. Thanks, Nick. Yeah, yeah. So that's that playing out. But do we see lower? Maybe. Spy has it noted up and down at 657, which is even further down, which is also terrifying to think of. Maybe we already hit that. Nick can, Doc can confirm. I don't know, but it's not looking pretty. Shorty, I might just do like on stages on Sunday nights. Nah, no specific channel, but yeah, it'll likely be, yeah, Nico's right. It'll likely be Discord stages. CMOs, that's gonna be CMKDylan. Put it here. Yeah, you can't even have the line highlighted. It's weird, Mike. Just be careful, Mike. Tradeovate. This is actually a little disclaimer too. Tradeovate, I believe, stop buys, I believe, is a stop market. So just be careful. There can be a little bit of slippage if you do it on Tradeovate. If you use NinjaTrader or Project X, it's a little bit cleaner, but Tradeovate's a little bit more of a stickler with that. Just giving you a little heads up, Mike. But nevertheless, it still works. I did the stop market, right, on Tradeovate, and it worked out nicely. So David, that was my prediction. Basically, that's to say ES hitting 6584 is the last line in the sand. NQ is already below level. We need to reclaim it, otherwise we're going to be in for a long way down. All eyes on ES. ES hitting 6584. You can expect if Heatseeker's confluence had open, we could see potential upside. Uh, but context is still gonna. Well, I mean, obviously, if we hit level, I'm not gonna be looking to short it because I'm not gonna short off support. But all eyes on 6584. Uh, David. Yeah, just be careful, Mike. Spy at 660 right now. Oof. And it's nice being back on Eastern time. I was so used to having markets open at 7 p.m., which is a futures market opens at 6 p.m. Eastern. For me, it's been opening at 7, so it's nice having markets open at 6 p.m. So, anything else? If not, that's pretty much all I got. You swung SPX call and SPY puts. Well, your puts might print very hard. I'm hoping that your SPX calls get a spike in IV that gives you a chance to exit. But yeah, yeah. Puts look like they're gonna print hard tomorrow morning. Uh, CMOS, his name is CMKDylan. Um, but I put it in chat for you. If no other questions, then that's pretty much it. I would go over it one more time, just to kind of give like what I see for the market this week, kind of like a weekly prep. Start looking at VIX, right? So we're in a high vol regime, right? We need to keep an eye on the VIX in a high vol regime. Does VIX have any upside? Basically, we break above this level here. We can definitely see much, much higher. I would be watching. Oh, let's see. We have a pretty key level here at 35.81. If we get up there, you could look for potential trend exhaustion on the bear side. I wouldn't go necessarily trying to dip buy off of VIX 35.81. I'd be looking for VIX to approach that level. What's our low level here? Is this a gap fill? There's a gap fill here too. Yeah. So we have a little bit of resistance at 32, 33, 72, and 35.50. These are levels to watch on the VIX. We hit these levels. Keep an eye on the indexes for potential support levels. Keep an eye on Heatseeker for confluence of those support levels, as well as keep an eye on Heatseeker confluence for VIX rejecting. Just disclaimer, I don't really use the VIX heat map that much. I just treat the VIX chart like any other index. VIX hits resistance. That's obviously bullish for the market, right? So I just add as an extra layer. That's all I do. Then I want to see that line up with some sort of key level on the charts. 4 hour, because this is a like higher time frame play. Hourly is fine too. Either one is fine. But because I need to zoom out a little more, I would go to the 4 hour. NQ has key support there. Below that, we have a level here and levels here. Want to see something line up with potential resistance on the VIX. ES has a bit more down. And we also have a key level like here. Actually, that is just about the key level. So below that, you can say something. Where the key one is here. But I believe there's a little bit of a smaller support. Find it. Just going back further. Spot prices here. The level here. That's basically the level. So pretty much it. I'd probably put a region here. Yeah, something like that. Yes, Blair, absolutely. I'm going to post it on YouTube, hoping that it gets done ASAP. I'll probably try to have it done before market open. 661, 6621 on SPY, 1 hour is decent support. Let's take a look. Yeah, I'd call that decent support, but I believe we gapped down from that already. I think we're below this level. I think. Who said that we were at 660 right now? Yeah, SPY's at 660 right now. So we may already be below that, meaning that the next area of support for SPY would likely be like down here. For 649. We haven't noticed 657, but I think 657 here. Not really looking. I'd probably look for something like this, right? 650, maybe 654. Hard to say. Really hard to say. It's not really super clean on SPY. There's quite a few gaps. I would say base it off a ES, to be honest. ES and NQ. Yeah, we're at 660. 6621, I'm assuming that's SPX. Two one. At a level here, yeah. I just forgot what this level was. Was this on the weekly? I don't remember what this level was. So 657 can be bounce level, but we need to see confluence, right? It's just a node. Um, so it can be a bounce if we see floors across the board. I just don't know yet. Just off principle, we shouldn't really just try to play a bounce just off of like one thing that we see. We need to see confluence, right? We need to see stuff line up. But if for 657 to bounce, I want to see SPX show a level near 657. I want to see QQQ maybe showing the same thing with clear upside accumulation and no downside. If we get that, then yes, we will get a bounce. I think this was more so like this. I think that's what it was. 65.80 would not surprise me, to be honest. Yeah, NQ is just straight up drilling still. Look at that. That is a very, very healthy sell-off. There's no wick. This is some strong bearish momentum. Yeah, bears are in full control. Definitely bears are in full control. 24,000 key levels approaching soon. So be careful, those wanting to buy the dip. Um, Mike, if you did a stop buy like here, if you sold into the pop, you definitely made money. Like a nice little 20 points. Obviously, context is bearish. Bears are in full control, so I wouldn't go like expecting like big, massive rips. I mean, this is a nice one here, but I really wouldn't go trying to catch massive rips. Just maybe catch like a scalp, like I did here. Literally caught this low and just sold it into here. That was it. And I did that just for you guys, just to show you guys exactly like what I did. So without further ado, without further avail, that is it for tonight. Um, hope this helps. It is a very unique concept. Um, if anyone has any questions about anything whatsoever, you know where to find me on Discord. This will be posted to YouTube as soon as it is done. And next week, we're going to talk about a very unappealing topic, which is risk management and psychology, but it is arguably one of the most important. Um, so I hope to see you guys there. Same time next Sunday, and have a wonderful night. Take care, guys.